Good morning. Good afternoon. Don't say good night yet. We got a show for you. That's what we have today. A show, nothing more, nothing less. Okay, maybe a little bit more. We have a U.S. tax professional who is also a Polscan on the show today. In case you missed it, I'm Max. This is the RHMax channel, bringing you great guests from all across the world, mostly the U.S. and U.K., seems like so far. Australia every once in a while. But again, today we have someone who actually wants to come on and talk to you for free, to take any time out of his busy day to tell you all the stuff you want or don't want to hear about taxes in regards to many different things. But you're probably listening today, you're probably interested in the crypto side. So being a community member himself, he's going to have some nuance there. It's going to be interesting. And we did a chat with Anthony, the tax guy, Anthony the tax man. It's literally his handle, I think, on Telegram, about UK taxes about a month or so ago, and it went really well. So got a lot of interesting questions answered and some clarity. And this conversation is going to be, I think the last one was more of we had a lot of different questions I want to cover, especially, but this one I want to do more of a Q&A format. So I have some topics I want to cover with Carlos, but also feel free. Like, I want a big part of it to be, you all asking questions. So we are live. This is a live stream, if you're not aware. So please do comment with questions in the chat, and we'll queue them up. And again, be nice to our guests. Leave your emotions aside. This is tax stuff. It's not that complicated, or is it? Yeah, share the link, everyone. Let's get started. Let's bring him in. Welcome to the show, Carlos.
Hey, thank you for having me.
Of course. I think I tried to get a hold of you on Twitter maybe a while back, but I guess you don't get on Twitter too often, so we had to go back and forth a little bit. But then after that, you were very engaged, so it was very, very easy to get you on there after that.
Yeah. I've had a couple of people reach out to me from the community, and Toby and Rags to Riches, and it's been wild. Everybody wants information. We were talking right in the middle of tax season, and everybody just wanted the information. So a lot of people reached out to the company, but it was a little overwhelming as far as the amount of people that actually reached out. And now I'm just taking a break, so I started focusing on real estate and doing a few things here and there. So yeah, Twitter wasn't in the top of my priorities, but thank you for reaching out. I saw the message, and yeah, absolutely. If people would like anything that they may have questions on, I'd be more than happy to help anyone in the community.
For sure. I mean, we definitely appreciate having folks who are good in a lot of different verticals in the community. And there's a lot of people good on the engineering side, the dev side, the traditional finance side, the tax side, and everything else. So if you believe in taxes, some of this live stream may be helpful and get some of your questions answered. But before we get into some of the questions, things like, what's your story? How'd you get into tax services? How'd you get into crypto? How'd you find Richard Hart in the community? What's your deal?
Yeah, well, I studied finance, and I tried it for a year, and I didn't like it. So I went. My dad had an accounting firm, and I started working with him, and we grew the firm after that. And then there was some problems. He fired me, and then I did my thing with a couple friends, and now I'm working with great people. And I've been in the tax industry for a long time now, about like 17 years. I started focusing on tax strategy about 4 years ago, which means that tax planning is the main business that we do. And then as a result of that, or as a byproduct of that, we do a little bit of tax preparation. And what kind of triggered me to go into that was the fact that all these multinationals were making so much money and they were not really paying any taxes. And I really wanted to find out why. And that same mindset of finding how things work and trying to see how can I achieve the same results? It's what actually got me into crypto and got me into finding out about Richard Hart. My brother is the one that started trading with crypto, and I started trading myself a few years ago. And I made some money, and then I lost a lot more. And then there was one client that arrived to my office for tax planning, and he had several $1 million in capital gains that we needed to somehow shelter or somehow minimize the tax liability on that. And it really intrigued me. And I asked him, like, hey, I'm not making close to this amount of money in crypto. What is it that you're doing? He's like, have you heard about Hex? I was like, no, I haven't heard about Hex. And he was dealing with several million. And he was one of the ones that started with the referral program. And he's basically a Hex OG, and he got a lot of his Hex from referrals and from doing the Bitcoin into whatever it is that they had to do back then. Like Bitcoin holders got free Hex. And then from there, he started to DCA into Hex overall, and that's how he made that much in his gain. So that really intrigued me. And he started telling me all these different things about crypto that I had heard about, like not your keys, not your crypto. I never really understood what that actually meant. I still had all my money in different exchanges, but I kind of had it as a concept of like, crypto is my money and the banks are not touching it. But I never really understood the fact that the exchanges actually had my keys too. And all the different programs that I had, still I wasn't holding my keys. So he explained to me about not your keys, not your crypto. And he told me that Hex really empowered you to actually hold your own keys and be your own bank and create your own tokens out of thin air through inflation and so forth. And my mindset of, well, where is inflation coming from? Where's the yield, coming from? Is it really secure? Has there been any audits on it? And who is this Richard Hart guy? And then after I started listening to some of his videos about a year and a half ago, I really fell in love with this guy because he was the only person that was teaching me major crypto concepts. And he talked about security, and I loved everything that he had made. So from there, I invested in Hex, small amount, and then from there, I just went ahead and dollar cost average. And I think I invested back when it was like 1 cent, and now it's back at I don't even know what the price is now, but I wrote it all the way 1 cent to like 56 cents, now back to whatever it is. And it's been a ride, throughout all this time. It's been quite interesting and a year full of knowledge, a year full of exploring what is it that I wanted to do with my life. And we opened up a whole branch of crypto in there because people started really needing some help there. And that's why I dove deep into the project, because I needed to understand the ins and outs about Hex, the ins and outs about PulseX, because I needed to break it down. I needed to know how I was going to get taxed on the money that I was making, and how my friend was going to get taxed on the money that he was making too. So I was like, these yield, is it interest? Is it a smart contract that increased in value? Is it liquidity providing? Is it this or that and that? And I started to cancel all these different things as far as what Hex is not. And then I was left with, Hex is unique. There's nothing else out there like Hex. And as far as the dynamic, and I fell in love with it. Basically, that's my story with my involvement with taxes, tax strategy, Hex, and Richard Hart. And then we can go from there.
Very cool. Very cool. That's it's always interesting to see when professional services people get onboarded. It's even on the tax side where you have a client who ends up onboarding you. When you're on the other side of the spectrum and you get onboarded by another person from a different industry, and there's a product and you really like it, it's always fascinating to hear these stories of getting onboarded in Hex. So very cool. So
I've onboarded attorneys that I've talked to. Yeah, and I've onboarded family members, all these different people. But just by talking about it with other professionals, they just they get really enrolled in what Hex is and what's coming too.
yes, what's coming? Very, very exciting stuff. Well, you mentioned like some ways to, you thought about a lot of different ways to shelter and minimize your tax liabilities. What are some of the common ways with crypto that your clients or otherwise have been able to shelter, minimize tax stuff, things like that?
Well, there's several ways, and it really all depends on the goals, on the financial goals of some people. I can tell you that you can shelter capital gains through certain kinds of trust, but some of that will not give you access to liquidity, right? And that's not going to work for some people that would like to utilize funds in the immediate future. And then there is other type of shelters that you can use to fully invest in the stock market, and you can shelter that money from capital gains and then just shelter it over to a vehicle that will allow you to fully have a stock portfolio, but that's it, right? And then you're not going to be able to do anything else but that. And there's some other stuff that will allow you to have a lot of flexibility and freedom, but will have other restrictions, right? So there's always a way to avoid capital gains, and there's tons of different vehicles that you can use. However, it all depends on the profile of the investor. So my profile of me as an investor, right? Because every single person is going to be different. Me as a real estate investor, I like to grab my crypto gains. And as I grab my crypto gains, I go ahead and use those funds to then put it into real estate. So then how do I offset my capital gains? Well, I do cost segregation studies and I do all these different things. And therefore, I create all these different losses in my Schedule E. And I use those losses against all the capital gains that I make. So in that way, my investor profile has now achieved a few things. I have increased my cash flow from an appreciating asset such as Hex or Pulse or PulseX, whatever you want to call it. Because I distinguish basically assets in two different categories: cash flow and appreciating assets. And sometimes they're both. Hex, PulseX, and PulseChain, they're all appreciating assets. And even though we get a yield on Hex, it's really not a cash flow asset, because I have tried to do my staking ladders, and the price valuation really kind of messes the cash flow of things. And look, when we're in a bull and we're making a lot of money also on the upside, the staking ladders, you would need a big amount of money to be able to kind of create that sort of cash flow that will serve you to substantiate a lifestyle. So I have categorized Hex and PulseX and PulseChain as appreciating assets. Real estate, on the other hand, is an appreciating asset, obviously not as much as a crypto asset. But it also, as far as a certain profile, you can go ahead and create cash flow with real estate. So from those capital gains that I create on an appreciating asset, I go ahead and also transfer it to other assets that might be a little more steady on the cash flow. So then I can use that cash flow to put back into crypto if I want to, or to substantiate and elevate the type of lifestyle that I want. And in that place, now I have increased cash flow. I still have my capital in an appreciating asset, and I have reduced my tax liability to zero, because now I don't pay any money on the cash flow that I get on real estate with a cost segregation study. I create losses, and therefore those losses are going to go against the capital gains that I have here. Now, but that strategy only works for me because I like real estate, and I like to be active on the real estate that I have, right? Someone that doesn't have the funds to buy real estate, or someone that doesn't like real estate or doesn't want to even get involved, they need to look into something different. They need to look into charitable LLCs. They may want to look into GRATs, or they may want to be looking into DSTs, which is a deferred sales trust. And all these different strategies are going to be different to each individual. But one thing that I can tell you, which is basic, is even though that harvesting losses with watch sale has now being eliminated as of 2022 in January. What we used to do is that every time that the crypto market would go down, we would sell our positions to accumulate losses, and then we would rebuy our positions. So then we can go ahead and ride it on the way up. But we have now harvested all these different losses throughout the whole year to go against the capital gain at the end of the year. That was called, like, for example, in the stock market, in the traditional market, that's called wash sale. And wash sale, it's eliminated or disallowed if you rebuy your position within a period of 30 days. So that means that those losses of you selling your position at a loss and rebuying your position, those losses would be completely disallowed. However, since crypto is not a security and we do not follow their security law, we were able to just, boom, harvest all these different losses. And then whenever we had a large capital gain, it would be just against that. As of January 2022, that got eliminated with wash sale, but it was left in there that those losses would now be added into the cost basis. So if you have an asset of $100, you lose $50, and then you sell your position, and then you see the position go up to $150. That means that your original cost basis of $100 plus the $50 loss that you had in there is now a cost basis of $150. And since you sold it at $150, now your capital gain is zero. So a basic strategy for us to continue to have is to actually record the losses of the transactions that we have. Now, that might have a negative effect on certain positions as well, due to the fact that they're not going to be long-term anymore. So you have to be very careful and plan how you're going to go ahead and track the cost basis of certain assets. If you don't want to mess yourself up or shoot yourself in the foot by saying that that you are harvesting long-term capital positions, and then suddenly just because you're doing loss harvesting, you're going to then convert all those positions into short-term positions. And if you miscalculate and then you have gains, now you're going to get taxed as regular income instead of the preferred tax rate of capital gains, which is 15% or 20%, depending on your tax bracket. So, but that's a basic one.
Okay. And are there certain strategies that, maybe clients come to you and say, oh, I really want to do this, and it sounds intuitive, it looks okay, but then when you get into it, you're like, no, that's not a good idea? Are there certain interesting ones people should look out for that look too good to be true, I guess?
Yeah. Well, I mean, I can give you a very specific case. And my friend, he was looking into renouncing his I don't know if I should. He was looking into renouncing his green card and cashing out all these different things by applying for his Dubai's. It's not a citizenship, but it's a special status in Dubai where you create a corporation and then you have this special election for you to trade in Dubai, and all the capital gains taxes that you have in there is completely tax free.
Okay.
And he was doing the transition to do Dubai move since he has a preferred treatment, but he has to give up his green card. So in the middle of it, while we were talking to attorneys that would take care of all these things for him, they said, well, you're not going to be able to come back to the US unless you apply for a tourist visa. And he had to really think about it. He's like, I don't really have any family here, but I like the lifestyle here in the United States. And even though my increased bracket of taxes is going to be up to here, creating a life here is going to be better than creating a life in Dubai for him specifically. Now, obviously, for someone else, it might be adventurous and might be like, nah, I want to go over there. I want to go jump from Malta to Cayman Islands to Dubai, and I just want to live over there in that area. Good for you, But there's always negative there's always negative things. A deferred sales trust, for example, has a beautiful positive thing to it, but there's also a negative thing about it. So, for example, a deferred sales trust, what it does is that you sell $1 million in HEX right now, and you want to avoid capital gains. So therefore, what you do, you transfer that money out into the deferred sales trust, and you have well, basically you transfer the asset before you do the sale, and then you have the trust do the sale of the asset, so you can record the sale within the DST. And now that the transaction has been recorded under the first sales trust, it didn't capture any capital gains. Now you have tax-free money. But then the problem becomes, well, how do I take it out? And what can I do to actually use it? So one of the things, it restricts you to actually purchase only other assets, which is fine sometimes. Maybe you want to buy another crypto asset or something like that, or real estate. Maybe you could. Well, one of the things is that you are required to have an annual distribution in which it's considered income, and then you're taxed on that, which is fine. I didn't get taxed on the $1 million, and I get taxed on maybe $20,000 a year or $100,000 a year. That's fine. The tax bracket is a lot lower, and I can take it. The negative thing about it is that you're not. Yeah. The negative thing is that you're not the owner of it. You need to have an attorney be the administrator of that trust. So you need to have someone that you're really going to trust, because everything's on the name of the attorney that you just hired. So you need to be very careful on who you're going to trust, who is your attorney that is going to do all these different documentation to make sure it's formed correctly. So there is all these beautiful things that people will pitch at you. Oh, this trust and these type of trust. There's 100 type of different trusts that they promise you to avoid capital gains, or that they promise you to do a lot of these tax savings. But if they're not done properly, and if you don't do certain procedures that are in place, and you don't have the proper documentation, instead of being a positive aspect, there's going to be a negative aspect and create a lot of painful headaches in your life. Because now you got to deal with all of that, for you. I'm not saying run away from them. I'm just saying that all strategies are going to have a positive aspect and a negative aspect, and you should ask whoever you're dealing with about what those are, and they should be very knowledgeable about those aspects in the tax strategy.
Definitely. No, that was, yeah. I mean, the citizenship thing, or the visa thing, is a very interesting one too, and just the trust. Yeah, everything. Yeah. I think everyone hears about trust. They want to, like, oh, that is the number one thing to do, to shelter assets and stuff. But yeah, like you said, there's intricacies like, okay, can I actually get liquidity, or can I only go with other assets, and things like that. Is there a perfect? I mean, for I guess, how would you, if you're advising people and you have two different tiers of people, someone who's got $1 million worth of crypto, and you have someone who's got $10 million worth of crypto. Is there a different strategy you would use for those two types of people?
Yeah, absolutely. Yeah, absolutely. Like, the ones that are dealing in multiple millions of dollars, we're going to be dealing with them in a more jurisdictional point of view. We're like, what jurisdiction is going to be, your jurisdiction? They might be global citizens, like they might be just moving around different places that are more friendly as far as the taxes. And there might be other things that they have already implemented. I see that Puerto Rico, sure. Yeah, that's one of them. Absolutely. But you need to spend 6 months over there in Puerto Rico. And there are some people that don't want to do that. For example, in Malta, you just need to spend 1 day in Malta. So there's offshore planning, that it's a whole branch of itself that you can go ahead and study, and then just do that in case you want to do that. Some countries will require for you to have a presence in that country for a certain period of time. Some others won't. So the 10 million versus
that's a good one.
1 million.
If we just segue into Puerto Rico real quick while we're on it, why doesn't everyone just move to Puerto Rico? Like, why would you not do that? And then we can come back to the 1 versus 10.
Have you been to Puerto Rico?
I have, and I don't think I want to move there.
Yeah, me either. I just came back from it. I was in a couple meetings, because what I was thinking to create was packages for people, right? Like, all these people were so interested in Puerto Rico. And I was like, you know what? I'm going to go ahead and connect with realtors, attorneys, and other accountants, so I could go ahead and sell them a package where it's move-in ready, right? Like, I'll get your house, I'll get you paperwork, and then just give me a certain amount of money. I was like, I had that mindset when, like over a year ago, maybe almost 2 years ago. And then I started connecting with people in Puerto Rico. They were all excited about it. And I'm like, okay, let's go to Puerto Rico. I go to San Juan, and then, it's nice, but then I'm like, it's hot as balls, And I had to shop for new clothes because I had jeans on. They were all stuck into my legs. I was like, okay, this is more like Georgia type of weather. All right, I can take it. I just need to change. Walking around into certain neighborhoods, it's nice. But then I go into other neighborhoods. I'm like, oh my God, this is rough. This is really rough. And in San Juan, there's an area called Las Perlas. And even then, everybody scared me to actually walk in there. And I was like, I'll just walk in there. As I'm walking, everybody's offering me drugs. Everybody's just doing all these things. And then I was talking to a cop about it. I was like, why don't you guys do anything about it? Like, that's their territory. We don't mess with them. And we just want to try to keep it safe. They were telling me all these different stories about tourists, one tourist getting killed and blah, blah, blah. And then I started asking around different towns as far as what is it, how they feel about people going in there. Then they start talking to me about El Dorado and these beautiful areas that people are moving into, and the sentiment of people moving in there. And then I started finding out how Puerto Ricans hate the fact that Americans are trying to go there for do that. Now, it doesn't really matter, right? Like, you're going to do whatever you're going to do, and they're going to take it because the government is what is encouraging people to do. And that's why they have this program for people to actually move out there and incentivize the economy and bring it up. So if you want to ignore the whole sentiment factor of it, that's fine. But then I'm riding around. I did a road trip all around the island, and I was like, okay, like, there's nothing really special about this place. Is it worth for me to save a few $100,000 in taxes? Or is it, even if it was $1 million, is it worth for you to give up a life where you are? If you like where you are, is it really worth it? So then you have to do the cost, the opportunity cost there. It's like, if I make this choice, I'm giving up my life over there, and then I have to spend 6 months over here. And if you don't follow that 6-month rule, then they're very strict about it, So in my opinion, I presented it to the different people in there. We went back to Puerto Rico and we saw a couple of things, and I found out that it's not for everybody. Now, some people have moved out there, but I don't think should be pushed as much as people actually push it, because once you get there, you're like, I don't know if I want to be here. Well, the food is not great.
So for the people who, let's say there's people who are like, yeah, whatever, I love Puerto Rico, I'm fine living there. Maybe they have a ton of money, and they're like, oh, I can get all the what are the advantages, just for people who don't know? Like, wow, let's say you were okay moving there. Why would you move there, like, tax wise?
Well, tax wise, I would never move to a place, just, first of all, my personal opinion, just for the tax treatment. I would go there because they treat me well in all aspects of my life, because there's security, because there's opportunity for wealth, and there's all these different things, not just because they give me good tax treatment, first of all. What was your question? I got off.
So just like why anyone would consider Puerto Rico in the first place for taxes.
So there's a 6% bracket on corporate. So if you form a corporation in Puerto Rico, they tax you at 6%, and that's basically what you pay. So it's great. A C corp in the United States is 21%. Over there is 6%. And then you have zero capital gains. So if you're making all your living through capital gains in a KYZ exchange, then you're going to make that choice, So that's the choice: 6% and 0% tax bracket. 0% capital gains.
So that's why it's popular for like crypto millionaires to go there. Like, hey, if I go there, I can just sell my crypto, get liquidity, tax free, basically.
Yeah, but why? If you can go to Dubai and you don't have to spend time over there, it's like you do have to.
Are those the choices? And Dubai, Puerto Rico. Oh God.
Malta, Cayman Islands. You know, there's a Portugal was very popular last year, but they're taking off a lot of the crypto regulation. I mean, they're increasing crypto regulation, and now it's not as attractive anymore.
Gotcha.
But there's always Salvador. Go to El Salvador, dude.
So El Salvador is super friendly to Bitcoin, but also very hot in other cultural type things. But is there tax benefits to El Salvador then?
Well, it's one of the most dangerous countries in the world.
Yep. If you know Richard Hart's backstory you can learn some lessons as well about South America. There's some good places and there's not so great places.
I'm from Mexico. I know Hood. I know and I've traveled all over the world, and I think that the United States is one of the most wonderful places to live in with the greatest amount of opportunity. So I like to be here.
Yes, sir. I agree. I've traveled all over the world as well, and I always come back and I'm like, yeah, America's still the best place for me, for what I value.
Yeah, exactly. Yeah, for what I value as well. People value different things. And like I said, dude, you can still live here in the United States and have things offshore. But out of the whole tax strategy spectrum, offshore, it's only a very small portion of it. There's still a lot of things that you can do within the United States to avoid paying capital gain taxes.
Yeah. So with offshore too, I just want to ask this right before we get into questions because we got a few from the chat. But for offshore, what can you explain? How does bringing your money offshore help with taxes for people who don't know anything about it?
Well, the basic concept is the following. Some countries in some countries, like for example, if you wanted to exit the United States and then just cash out crypto money and different things, you would have to, depending on your wealth, you would have to either pay an exit tax to be able to do that and renounce your citizenship or your green card in the United States to then be able to do that. If it's under a certain threshold, and I believe it's like $2 million or $3 million, I forget, then you don't have to pay that exit tax. So for you to do the exit, better be when you're not worth so much, so then you don't have to pay that exit tax. So then what happens is that the country that is giving you the preferred tax treatment, you would then apply for whatever program they have available for you, and then just follow the procedures on that, and then you would have that preferred tax rate for whatever activity you want, whether it's a business activity or whether it's for capital gains. There are other things as far as how it works that, to give you an example, you get taxed on the country that it's sourced in. So if it's being sourced, like your business activity is sourced in the Cayman Islands, then you're going to pay a percentage of taxes of 0%. So therefore, when you bring that global income into the United States, you're like, I already paid taxes somewhere else, foreign tax credit sort of thing. And then it's not exactly that easy as I'm explaining it, but I'm getting you the basic concept where you tell the American government, I already paid taxes somewhere else. I don't have to pay taxes in the United States because I cannot pay taxes twice in two different countries. So therefore, I would pay taxes in this country, Cayman Islands. And then you say, okay, fine. So what is the tax rate? Oh, it just happened to be 0, So there's other things. You can create manufacturers, then whatever, it goes very complex into it, where you have maybe your intellectual property in one company internationally and you bill it, you work together with the American company and you offset each other. It becomes very complex very fast. But the main concept is pay taxes somewhere else and don't pay taxes here in the United States. But the United States doesn't like that. So they'll give you a lot of hoops to jump through for you to actually achieve that. And it's very frowned upon by the government. So they'll give you incentives for you to act in a different way before you go offshore. They have a new thing now, which is the FDII, the foreign dividend for corporations, that they'll incentivize you to stay here in the United States instead of taking your money offshore. So the United States wants to incentivize you to keep the money here and keep Americans working. So
Right.
That's all I got to say about that. Before you plan to go offshore, then you might want to try things here.
Gotcha. All right, time to get to the Q&A. Go to Q&A for a minute. We got a few questions in the chat. First one is from Ernie. Do I have to report gains if they're only in MetaMask? Do I report only what I transfer back to my local bank? Thank you for your valuable time and consideration.
Yeah, thank you, Ernie, for that question. It's very common. Surprisingly, it's very common. The answer is yes. You have to report everything. Now, the different question is, can the U.S. government know about it? And the answer is yes, if you have connected that MetaMask into a KYC exchange. So if you already did a KYC on your Coinbase and then you transfer assets into your MetaMask, you're screwed. They will always know what the address is because it's public. They will know where you sent it, and now they have a hold of your MetaMask and they see all your different assets and they will link them together. Will they do that? Not now, as far as the investigation, but they do have a new FBI branch specifically that does all crypto activities, right? And they can track all these different things. It will take some years to implement, but they're definitely creating divisions within the IRS to be able to track this activity. Now, as far as it not being registered or linked to any KYC account, can they see that? No. They will no way know that you're the owner of that MetaMask account if it's not linked to anything else. However, the responsible or the legal answer, is you have to report everything, even if it's in your MetaMask within whatever network you're in, Matic, Phantom, whatever, doesn't matter. Ethereum, PulseChain, it doesn't matter. You have to report everything.
Gotcha. Next question is from Holly. When PulseChain launches at 0 for the first 24 hours, is it wise to divide or transfer balance to multiple wallets?
Yeah, that's a good question. Now, before I move on into this one, what I wanted to also add about Eddie's question is the last part that he said is, or only when I transfer to the bank. So one thing that I want to make clear about that is that crypto to crypto activity or an exchange or a swap, it's a taxable event. So it's not only when you sell your hex into USD, right, that it's a taxable event. No, it's if you sell your hex into USDC or Ethereum, or whenever you go from USDC to Ethereum to then buy your hex, now that was two different taxable events that you now have to record. Obviously, we're going to, in our crypto reporting that you're going to do either on Coinly or CoinLedger, whatever tax tool it is that you're going to do, you're going to identify what is a taxable event. And we can go deeper into what is a taxable event. But for your specific question, Eddie, any movement that you do within your MetaMask account, it will be a taxable event, by the way. And therefore, my answer as far as why is it that is reportable. All right.
Very good. Okay. To Holly's question.
Yeah, when PulseChain launches at 0 first 24 hours, is it wise to divide or transfer balance to multiple wallets? Look, I have a couple friends that have asked me that. I just don't. It's a good question because I don't have like a full answer on it. The only answer, as far as the advantage for you to do that, is because you want other people to also have that, like the zero capital gain as far as when it was actually received. So whenever you go ahead and send it at zero value to someone else, that means that person will also take advantage of recording that airdrop at zero. But you can do that yourself, But if your plan, though, is to give something to your mom or give something to your grandma or your brother, then I would say absolutely within the first 24 hours, go ahead and transfer Pulse or PulseX into different wallet addresses for your sister, for your mom, for this and that and that. Because once it goes into having a dollar value and you want to go ahead and gift that same tokens to then that same family member, then it's now going to be a taxable event where it constitutes a gift. So therefore, you would have to do a gift tax return if it's over a $15,000 amount. So the advantage of that is for gifting more than anything, because I don't see any other logic other than that for this specific move.
Well, it's very good. Great question, Holly. One second, I'll cue the other question.
Mm-hmm.
Okay, question number 3 from Daniel. What is the difference between getting an asset at zero value versus some value?
Mm-hmm. Well, the difference is that one of them has zero value and the other one has some value. So,
and the consequences of
that means that whenever you, I'll explain. Obviously, when you receive an airdrop, it becomes a taxable event when you take control of it and when it's tradable. So therefore, when you claim the airdrop, it becomes a taxable event. So when we claim the airdrop of X project, whatever the value, USD value is, we're going to record that at the fair market value at the moment that we claim the airdrop. So therefore, that is then going to be recorded as income for us. When now we're going to receive PulseX and Pulse at a zero value, we're going to take control of this token. And therefore, we'll go ahead and report that as a taxable event in our taxes, and we'll report zero value as income. So therefore, the fact that Richard is really giving us a favor over here, massive favor as far as tax treatment, because now we have we're going to claim now the airdrop at zero value, and therefore we're not going to report any income in our taxes. We're only going to report capital gains at the moment of selling the token. And as far as your cost basis, well, there's different arguments about it, but in my personal opinion, it's a zero cost basis when you received it. So it's the moment that you received that for market value. And therefore, now Pulse is trading at $1 and you sell. Therefore, the full dollar will be your capital gain due to the fact that you recorded a cost basis of zero.
Very good. Also, Ernie says, thank you. Answer that for question number 1. Question number 4. Let's see where we at. Yeah, here we go. Another one from Daniel. When you get a loan against your crypto, is it a taxable event? If not, can it be if you get liquidated?
Yes, absolutely. That's a very good question. Do you get a loan against your crypto? It's not a taxable event because you're not trading one token for another one. Now, what would constitute a taxable event is I haven't really looked into liquid loans, but I know that you mint a stable coin for the initial deposit of Pulse that you would do. I'm not sure if that constitutes as a loan from the tax perspective, or does it? I have to really analyze the dynamic of the ins and outs of this specific platform. But let's just go ahead and generalize the term loan. If I put it into a platform and then I get a collateralized loan into it, no, it's not a taxable event. But the fact that you're minting something into existence might be a taxable event. Like I said, I have to really look into the dynamic. I don't know.
Does abandonment play into this?
Say that again?
Does abandonment play into this at all?
abandonment. What does that mean?
Yeah, for example, if you, I just know I believe if I remember correctly, there's some tax deals around abandonment. So if you like, you give, for example, with PulseX sacrifice or the Pulse sacrifices and stuff, there's been some tax things around abandonment, like, oh, I gave it away. So maybe it's long term versus short term, maybe some intricacies there when it launches. And also for loans, would it be considered you abandon it and you get some other asset? Does that play into anything here? Or does that make any sense?
Well, I mean, it does make sense, but I think it gets very complicated very fast. There's no terminology in the tax code that refers to abandonment with a crypto asset. So how do I define it? Well, I would have to compare it to maybe some other commodity or asset that, in which case that would apply. And I would like to see the whole scenario as far as the dynamic of how it's working and where is it that you abandon it? Because if you abandon it, where are you abandoning it? It's not like you went to the desert and put it in there. No, it's like you put it into a platform. And why is it that is defined as abandonment? We have to look into the legality of those terms and see whether that applies or not. I'm not familiar with that term of abandonment on crypto, so I'll be happy to look into it. But going back to this answer, as far as does it get a taxable event into if you get a loan into your crypto? No, it doesn't. That's a very good way to avoid tax on your crypto if you want liquidity for it. And can it be a taxable event if you get liquidated? Absolutely. It is a taxable event because now your original position has been now terminated, is being sold. So therefore, you will incur in tax, whether it's a capital loss, it's a taxable event, or whether it's a capital gain, is a taxable event. So that's the dynamic on that. And I think liquid loans does have some information about that. But anyway, from my perspective, from the tax perspective, it is a taxable event.
Sure. Got another question here from 77 Crypto. Thank you for the compliment, sir. Carlos, do you advise individuals that are starting crypto projects?
Sometimes. Depends on the project. I've had many approach me, and I'm not saying that U07 my crypto is one of them. But if you're asking the question is, do I advise? Is sometimes I've had people that had me advise in projects that then I realize are just pure scams. There's and ethically, I don't feel comfortable advising on projects that are going to screw people over the long period of time, or that they have admin keys, or that I know that they could shut off the project or pull liquidity or things like that. I'm a very diehard fan of no admin keys and no harming people. So if your project has a certain things that check off my ethic list that I could help, where there's no risk in the sense of the developers doing something shady, I will more than happy be a part of the advising team for tax structure or entity structure or jurisdiction structure for crypto projects. But like I said, they would have to check off all these different things for me to be able to put my name into or sign a document that would be comfortable and that'd be able to sleep at night,
Yeah. I think the theme, that we've been discussing so far has been, you want to move to a place or not move to a place. You want to be comfortable where you're living. A lot of these, I don't know what you call it. Not aesthetic. What was the right word? Not utility. A lot of the things that, make your life more comfortable are worth more than money in a lot of ways. So I really like that we're hitting on that too.
Yeah, absolutely, man. And even if it's just the focus of people that is so encouraged in the crypto market. And look, I think Richard is a great marketing person and he's a genius when it comes to that. But the negative aspect of that marketing is that it really focuses a lot in having people purchase just material things instead of actually building wealth for themselves. And look, he's not a financial advisor, or he doesn't work for anyone, so that's not his job. He does what he does, and he's really good at marketing, and it is what it is. But I think that there has to be some financial education with the community and with everybody in the crypto space, that is not all about when pump and when Lambo. It's about creating a strategy for yourself that works, and what is it that you're going to do with your crypto gains that it's actually going to expand your wealth. How are you expanding your asset list, and how are you expanding your cash flow, and how are you optimizing all of that for it to be tax optimized? So I think that overall, people should look into different areas to build wealth, and not just wait for one pump and then buy myself a Lambo or buy myself something. I think that money that you're making should be for you to build wealth and create something for you and your family. If you don't care about that, fine. There's a whole spectrum of people. But in my circle, that's usually the case, and I like to encourage people because I see beautiful results from that, and people are usually more fulfilled.
There's plenty of exotic car dealers out there that'll give you whatever you want if you got enough money.
Yeah.
I want to ask too. So on that, let's go through a scenario if you don't mind. Let's say whatever it was you could use if through Hex or through PulseChain or whatever it was, you've made a lot of money. You made like a few million, let's say $5 million. Instead of buying like 10 Lambos and actually setting yourself up for having a wealthy, healthy, happy life, at least putting you on the right track where you don't need to worry about money, financially free, don't need to work. You can, work for whatever you want to do. What would you do? Like, just take me through the scenario of how would you set that up where you can live financially free on a few $1 million after making it through, crypto projects?
That's a great question. There's a game called the cash flow game.
Yes.
Great game. Yeah, absolutely. The Rich Dad Poor Dad. Robert Kiyosaki wrote that book, and he also created this game called the cash flow game. So the whole game, and I love that game. I played it when I was 16 years old, and I fell in love with it, and that's how also I got started into looking into building wealth. Like, how do I do this? Blah blah. That was the main book. That was my first book that I fully read, and I was so into it. But anyway, when you're making millions, and I have this with one client actually, his dad passed away and left him a lot of money, and he got left with the property in the coast here in Los Angeles, in an area called Pacific Palisades, which is very, very exclusive, incredibly expensive. You cannot get something lower than $3 million. It's next to Malibu, next to Santa Monica, prime location. He renovated the whole property with his dad's money when he was alive. He spent like $500,000 on the property. Incredible, beautiful thing. And what he focused on, and I'm not saying that he's wrong, I'm just saying what he did. What he focused on was on getting money and securing cash in the bank. So he cashed out when his dad passed away. He cashed out pensions, and then life insurance policies, and sold the property. And then suddenly he's got a few $1 million in the bank. Now his main concern is about, what about if the recession hits and there's an implosion in banks and now they're not going to give me my money? So he is in a mentality of, how do I secure all these millions of dollars into the bank, and how do I make sure that it doesn't go away? You see, so what that gives us is like, okay, fine. Now you feel a little more comfortable. And who wouldn't want to receive just, a few $1 million just to keep in the bank? But the mentality that you need to have when it comes to this is that having money in the bank is not just the best thing for your security, because if you're not, worried about paying your rent next month, then you're worried about the recession. And how is the bank going to secure your money? You're always worried, so it's a mental issue rather than a money issue. So in someone that has captured this, I would say that then they need to secure their money in assets that keep on producing cash flow. There's another book called The Richest Man in Babylon. And one of the best advices that The Richest Man in Babylon gives is to, save, your salaries and so forth, and then put that money into working. And then it gives examples of how then he loses that money by giving the money to a brick maker to buy gems, and the richest guy says, why are you giving the brick maker your money to buy gems? You should have gone to the jeweler, So it teaches us different principles that we need to apply into investing our money, and not being afraid of it, but doing it correctly. And those two structures, like the cash flow game and the theories of, or the principles of The Richest Man in Babylon, is what I would give as an advice to someone that has captured millions of dollars into from crypto. Buy yourself investments that are going to continue to appreciate in value, that are not as risky as crypto, because you don't want to put 100% of your assets into crypto. Some people might do it, and I know some people just don't care and they just go ahead and do that. But my personal opinion is, for example, real estate, it's always a beautiful thing that I love. Make sure that you know what you're doing with real estate, because you can also, F it up, and make sure it cash flows, make sure it's in an area that appreciates, and you're going to do great property management, all that kind of stuff. And then you have secured that, and one of the things on The Richest Man in Babylon says, have so much cash flow that no matter how much you spend, the cash flow coming in, it never ends. Yeah. So it's about having money in the bank, but that money in the bank should only be for when opportunity arises, that you're ready to jump on it to create something. The thing about money is that you always have to be active about it. Unless you want to just have $2 million in the bank and you want to buy a house like the one I'm here right now in Joshua Tree, surrounded by mountains and desert, and I have a pool, jacuzzi sort of thing, and you just want to live out there your years for complete retirement, then I would say, yeah, fine. I don't need much. I spend here maybe $500 a week or whatever, and I'm good. Like, why else would I need more material things? But if you're in the game of, building wealth, then I would say follow those two principles, the cash flow game and The Richest Man in Babylon, and you're going to do great when you're able to capture those capital gains for Pulse and PulseX.
So with 5 million too, I mean, is that some of the strategies we talked about before? Is a trust the best way to do it? If you don't want to just retire, or you don't want to spend it all on a house, or just draw on it the rest of your life, what do you think would be some good ways to minimize the tax and also be able to get liquidity from it when you need it?
Well, those are very complicated questions, as you just asked. It's like, how do I have immediate liquidity to a capital gain, but how do I also not pay taxes on that, and how do I secure the asset? Those are things that you should definitely. Yeah, I don't think that there's a simple answer. I think it's just a combination of multiple things that go into that. It's some of it is going to go into a trust, some of it is going to go into real estate, some of it is going to go into the stock market, some of it is going to go into savings, some of it is going to go into retirement, some of it is going to go into. It's a combination of multiple things, because like I said from the beginning, what is your goal? Is your goal to just be out in retirement, or is your goal to really build your wealth? The S&P 500, if you wanted just to do that, it has a very tiny growth compared to anything else, but it's a steady growth, and it's been like that since the 1920s. So do you want to put that there? Like I said, it depends. It's all about differentiating between your appreciating assets and your cash flow assets. My personal belief is that crypto is not going to go up forever. We're going to experience all these different waves, and in the middle, we're going to need requirements. I mean, we're gonna need liquidity. We're gonna need to buy things. So I would say that $5 million would allow you to be in a position where you can make choices. But it depends on your personal investor profile.
Gotcha. Yeah, I think we all should be so lucky, right? We all should would want to have those type of options, and that's how you do it in the bear market too. This is not a fun time in crypto. This is not, people. There's not quite as many parties going on, and FOMO tweets and all these things. But hey, this is, to me, I tell people, this is how you learn. This is how you go back. You read books. You read Richest Man in Babylon. Fantastic book. One of my favorite quotes from that book is. One of my favorite quotes is, the two guys in the beginning of the book, they're sitting around talking, and he's like, why aren't we rich? Like, why do these kings have all these things? Why all these rich people have all this stuff? Why aren't we rich? And the other guy's like, well, I guess we just never wanted to. We just never wanted it. We never thought about it. And that was so meaningful to me. I was like, wow, that is so key. That is so key for so many people in their lives. Rich is not something, everyone, you ask somebody that you want to be rich. Oh yeah, of course I want to be rich, but they don't really need it. It's kind of a nice to have, kind of, oh, it'd be nice if I had, $5 million, whatever. But if you need it and like you really actively work towards it, and then you have an opportunity like, oh my God, crypto, highest appreciating class of assets ever, Hex, PulseChain. Hopefully Hex is, best, superior product. We hope PulseChain and PulseX are going to do the same or even better. If you have these opportunities and you put the work in, you have a chance to be financially free. It's just common sense. You go look at the chart and see these things. You see how many people have already gotten rich. And
it depends on what you call financially free, though, because I don't think that being financially free means having $2 million or $5 million in the bank. I don't think that that's financially free. Financially free, because you're gonna, if you're a person that spends $50,000 a month, you're gonna go through that quick. Right. And I do have friends that spend like that, and oh my gosh, every time we go to Miami, spending $10,000 a day on one table, and then boom, we go to dinner, and then another $10,000, and then let's go to the club, and boom, this is another $5K. $25,000 just in the span of a few hours. I'm just saying, once you get that little tickle of like, I can spend my money, you can just look at Richard Hart. It's like, yeah, he likes to spend. So I would say that you're not financially free. Financial free is when you have enough cash flow coming in to cover the full amount of your expenses with no problem. So therefore, you need to structure yourself for those assets to be then bringing in income for you. And you know what? Crypto is not going to do that. I have tried it with Hex and staking ladders and all these different things, and I cannot just grab that staking yield to substantiate my daily expenses. It's only when it pumps, and then I'm like, I need to capture some gains in here if I need them. But also, I have 90%, 99% of it. It's staked, in a 5, 10, and 15 years, where I know that money is going to be a lot greater, like, in the future. And then in the future, I'll sell it. But what am I going to do with that money, man? The thing is, that's why I love real estate so much, man. And I'm not trying to preach, like, go outside of crypto into that, but I'm like, just build a structure for yourself that will continue to give you cash. And I'm sure that there's other assets out there that will give you some sort of appreciation and cash flow. But the game is, can my cash flow substantiate the full amount of my expenses and maintain that level? Then boom, you can choose to either work or not. But $5 million in the bank is nothing, man. You're gonna go through it quick.
Depending on your lifestyle, like you said, yeah. If you're traveling and you still plan on living, a nice life, yeah, $5 million.
Once you get the tickle, though, man. Once you get the tickle spending, you can do so much. You feel the power. You feel the everything, man. The things, how people treat you, and all these different things, and it's a different life. It's a different world.
Yeah. I think that's why I would speculate a lot of people that get rich in crypto or get millions and millions of dollars, they take at least some of it out, I would say, and put it into real estate. They go into other investing opportunities, a little bit more stable, or they could just kind of live off the interest type of thing, or they put it into other assets, S&P 500, blah blah blah. But I don't think there's a lot of crypto rich people who never ever sell. Like there's a few, and I imagine they'll be handsomely rewarded, way down the line. But there's a lot of people that maybe they take some of it out and put in other stuff to live on to enjoy that type of lifestyle. But yeah, I get what you're saying about your confidence goes way up when you can buy anything you want. I understand.
Yeah, and like Richard, it's a non-proclaimed billionaire. Like, who cares, dude? When you have that kind of money, you can just spend, and you don't worry about cash flow. Like, why? But a lot of us, we're not in that level. We are in a level where we need to create a structure around us that provide for our daily expenses, and we need to start building from there. We're not going to jump from where we are directly to where Richard is. So we need to start at our own pace. We haven't really founded a community or a token that sacrifices $1 billion, and like suddenly I find myself with a bag with $1 billion. Like we're not doing that. Richard Hart did. What are we then doing? Let's not try to imitate what he's doing. Let's try to create something for ourselves. And what works for ourselves is smaller types of opportunity with the amount of budget that we have or the amount of crypto gains that we have that we can capture, at least whether it's 6 million, 10 million, even if it's 20 million or $100,000. $100,000 for people is going to be great, and they can start with a deposit on an investment property where it cash flows $4,000 to $6,000 on Airbnb for them, and that is their key to quit the job that they wanted to quit. And then they can refi that house and use that money to buy another property. And then suddenly they find themselves with a little extra cash in their pocket. And then, boom, they find a little business opportunity. I'm not saying that this accelerates as far as the growth as the same as Hex. Obviously, there's nothing compared to it. There's nothing compared to it as far as the rate of acceleration. But we need to create things for ourselves. And creating that structure is what gives us this foundation that will allow for abundance to be there.
Yeah. I mean, it takes money to make money, right? So if you can make a bunch of money in crypto and then go put it in other stuff, or leave some in, and I don't know. I think the way the crypto is going, I think there's gonna be a lot of people that will never be out of crypto, for example. Like, I can't imagine myself ever being out of crypto, especially because I know it's going to grow. I know the opportunities are going to go away, a lot of them. I don't know if there's ever going to be a Hex and PulseChain and stuff like this again that we would be privy to, and we would have the opportunity before billions of people get in. So this is kind of like the start of an early market. And I know Bitcoin's 13 years old and all this stuff. If you watch Richard's stream, if you watch any of his streams, but I think as far as RH ecosystem goes, like, how many projects do you think Richard's going to create? I mean, you think there's going to be 20 different coins in the next 5 years? I don't know how many opportunities we're going to have. So I'm fortunate and glad, and have a lot of gratitude that I was able to find this type of community ecosystem, because financial freedom never seemed to be closer than Richard Hart's microphone.
Yeah, it really got me inspired to do so many other things, in my life. So it definitely opened the door, for me to do many things. And it actually added so much more confidence to me for the potential of what could be possible. I didn't know that this amount of wealth could be possible without the projects that he has created, or without crypto, specifically for Hex. And I'm very grateful for Richard Hart, and the view of possibility definitely expanded, with being familiar with the community and projects that are intended to be for the community, that are safe, and for us to have someone that teaches us so much.
For sure. I mean, best. I don't know who's a better fan. Like, I know I've been following him since 2017, and I was kind of looking for a mentor passively, of course, when I first came into crypto. And wow, coming across him was just like, it's like winning the lottery. Honestly, it's about the only way I can describe it. Like winning the lottery, but with no negative externalities. I'll say it like that.
Yeah, well, it was a lottery when it hit 56 cents for me. When I looked at my portfolio, I'm like, oh my God, I had never seen numbers like that at 56 cents. I was like, holy crap.
I bet a lot of people looked at their portfolio last year and were like, hey, hey, you want to retire? We think we're close to retirement now. A lot of people did that.
Yeah. So we'll go back to that position. I don't know, but I have the confidence that it will. And even if it doesn't, I'm acting like if it doesn't. So therefore, I am creating things for myself around that will allow me to still have that foundation. You see, so I'm not giving up on myself. I'm still working hard. I still, do things like tax strategies so I could, put food on the table. And at the same time, got myself familiar with all these people that I engage with, and they have taught me so much in traditional finance and real estate and so forth, and therefore creating a good foundation around me. So I think that's a path that people should follow. They shouldn't expect crypto to just explode and have Lambo. I think that they should work on themselves, their mental health, create new skills for themselves, and also expand their mind so they could be ready for when opportunity hits.
For sure. And it's so funny to think about, your Hex portfolio, last September or whenever. That's just Hex. We haven't even, PulseChain hasn't launched. I know if you're not aware, if people aren't aware out there, PulseChain has not launched yet. PulseX has not started trading yet. There is no PulseChain wallet that I'm aware of. And these are all like brand new opportunities. Like that gives me energy in the bear market. Like if nothing else, knowing that, if you're good on the Hex side and you stacked for, the other sacrifices, oh my God, like how can you not be and look forward to the rest of the year, in 2023, regardless of what the macro environment's like.
Yeah. I always have a long-term vision. Delay gratification is one of the major principles that Richard Hart has taught me.
Yes, delayed gratification. That's what I like about Richard too. The human principles, the mental models that you learn from him, that are worth more, just as much. I think getting rich monetarily and then getting rich mentally, they go hand in hand. And he's the only founder that gives you both that I've seen, that can really help you in both directions. It's even if you don't do live streams, and I know, of course, everybody likes his old live streams better than his new ones because, fashion show watches versus, I don't know. There was there's definitely still gems out there here and there, but I definitely 2020 Richard, 2021 Richard, even 2018 Richard. Go back and watch those streams. There's still a lot of relevant stuff today that you can use to just, be better in so many different directions.
Yeah, for sure.
I wanted to get to, so I know you want to talk about Coinly and some of the Hex transaction classifications. Maybe we'll wrap it up with that one if we don't have any more questions.
Yeah. I would, that's a great topic to wrap it up with, because people that have filed extensions for their tax returns are still dealing with this at this moment. And I have several clients that I'm working with that I'm still dealing with their stuff, so one of the biggest challenges for people right now is the classification of the Hex transactions as far as sending it to the sacrifice, not to the sacrifice, to the OA, to the original, to the burning address. When they create a stake, Hex gets burned, and then you mint new Hex into existence. So in Coinly, it will show the transaction, send it to this address, and then you kind of pull it from that same address, but with additional coins. So then you have to do something in the relationship of sub-deleting that account, and then separating the capital that you're taking out, and then separating the yield that you're receiving in addition to, so you can classify it correctly as far as how you're going to pay taxes on that yield. So A lot of the stuff that I'm encountering right now is that people that have their stakes or that they trade with their ledgers, Coinly is multiplying. It's not Coinly's fault, but that's just the way that it gets from Etherscan. It recognizes a double transaction. It moves the asset from Ledger to MetaMask, and then from MetaMask to whatever protocol you're using. In this case, Hex protocol, and then it sends it to the burn. But the movement of assets, when you produce a full amount of the report, it will double your transactions. So instead of having $200,000 in capital gains, you're going to find yourself having a $500,000 capital gain. And you're like, what? How? I didn't make this money. Well, that's because you have to go in there and go transaction by transaction to edit whether it's a taxable event or not. The transfer of assets from your ledger to the MetaMask is not a taxable event. So therefore, all those transactions that you're encountering should then be categorized as non-taxable events. And the other thing that people are encountering is how do I self-delete a transaction, and do I need to do that for all the different? Yes, you have to. It's you're going to have to edit each transaction to then separate the capital from the yield to be able to capture that yield as an increase in value from the smart contract that you entered or that you were holding, and therefore that yield should be taxed as capital gains. So we should categorize it so we can have the correct cost basis. So put in the work, to get that taken care of, to do it correctly. So then when you are in a position where Hex is $5, then that initial cost basis that you created is done correctly.
$5 Hex. I like the sound of that.
Yeah. Do you prefer Coinly or CoinTracker? It depends on the client. I love CoinTracker. It's sophisticated. It's easier to use, but Coinly Coinly allows me to modify price, allows me to modify different things that I cannot modify in CoinTracker. So you're going to encounter certain transactions that say price was not found. So therefore, you have to go in there and edit the price for that transaction on the crypto asset that you were able to get. So you're not going to be able to do that very easily in CoinTracker, or I haven't found a way. Maybe it's possible, but I just haven't found a way. I could edit more stuff on Coinly, but it's less sophisticated. It's So that's my opinion about it. I use both. I actually use like 4 different softwares.
Okay, very good. Cool, man. There's thanks chat for keeping it not rowdy. I was prepping Carlos before the stream, telling him like, hey, when we had the UK tax guy on, it got a little bit rowdy. Not too bad, but I had to tell people, be nice, be respectful. Everyone. Sometimes their emotions get going wild, when they talk about taxes and they think, there's so many complexities around it, and they've heard this, they've heard that. So thank you, chat, for being very civil. You were very nice today to our wonderful guest who just dropping all kinds of gems, all kinds of knowledge. It's nice to finally meet you, man. You're at Crypto Tax on Twitter. If you want to follow.
That's my tag, though. At Carlos D. Quintana.
Oh, sorry. Yes, I was thinking. So, are you Crypto Tax on somewhere else, or is that just a nickname?
My name is Crypto Tax -Hex with a little
your legal name
emoji. Say that again.
I said your legal name is my legal name is Crypto Tax, but I go by Carlos Quintana.
Yeah. No, I'm a turtle on my stake wrap. So that's why I put the little turtle in there. People have like dolphins or sharks or squids. Those are the really rich people, so I have a little turtle. I'm in the turtle category.
Hey, paper poor. Don't worry. Paper poor.
Well, I still got property, so I'm not saying I'm poor, but
Yeah. No, I'm joking.
No, but yeah, man. So if I'm allowed just to say, I work with a great company when it comes to tax strategy and taxation and having people to resolve tax issues with Coinly, the crypto reports and stuff like that. And I just want to give them a shout out because they're amazing. It's Maurice Joffe Tax Service, and we're located in the west side of LA in Santa Monica. So if you guys need any help, we're more than happy to help.
Yes, of course. And just a correction, at Carlos D. Quintana for Twitter. And you don't have a YouTube channel, or you do?
I do, but I'm not a YouTuber. I just post things. Like I wake up one day or in the middle of the night, I'm like, have a good idea of a topic. I'm like, I'll just record it. I think I've recorded 2 videos. So I don't want to give it a shout out. It's
okay.
It's more like a personal blog
YouTube
that
channel.
I just talk shit.
If you really want to find out, you can search YouTube for him. One last question from Daniel Garza. Carlos, when bottom and when launch, sir? Please, me familia.
I will say my calls are the same as Richard, so when bottom, when launch. When bottom would be when 11K happens in Bitcoin is when we're going to bottom out, and everything else kind of follows, so I'm still waiting for that $11,000 to $15,000 Bitcoin to actually call it a bottom, or when Richard Hart says basically that it's a bottom, then I'll probably listen. And when launch, you just have to be patient, man. He's got 14 developers working 24. I actually got 14. One of the developers as a client.
Awesome.
Yeah. So,
nice.
Yeah, I didn't know. It was such a great surprise. And I was like, oh, you're one of the developers. And, so we were chatting, and it's just a lot of work, man. They're going through so much with all the things that need to be in compliance and working and all these different things. And I don't understand half of it. But it's nice to know that they're working very hard.
They are. And when it comes, I think it should be glorious. And while it will not have automatic failure like it could have had if they didn't fix the bugs in mid-May. Wants to be perfect, it's going to be perfect. We're going to do our best to make it perfect. So
just be patient, man. Delay that gratification, man.
When you start asking when, you start feeling, I can't wait, all this stuff. Yeah, just tell yourself you're in the Richard Hart ecosystem to delay gratification, not instant gratification. That is the opposite of why Richard Hart products were invented. Did I just coin that? Okay, I'll take it. So cool, man. It's been a pleasure, Carlos. You were great, killing the questions. Chat really appreciate it. We could tell by all the good comments. Again, super nice to meet you. Thanks for taking the time, energy, brain power. You're truly an asset to the community. You've definitely helped a lot of people today, and I'm sure you'll continue to with your clients and your business. And again, everyone reach out, follow him on Twitter. If you're interested in tax services, he has a company there you can reach out to too. And thanks again for coming on. Really appreciate it.
Absolutely, man. Thank you for having me, man. I really enjoyed myself. So I'm gonna jump back into the pool. It's 103 degrees out here, so I'm gonna enjoy the heat.
Oh, take it easy, man. Enjoy that pool, and I'm gonna join dinner. We're out, everyone. Thanks again.
All right, man. Take care.